Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. We have another weekly watch list video for you guys here today, and we're going to go over the whole stock market and the technical analysis, what we use for market direction. It's kind of like my compass. So I look at the /NQ, the /ES. That's the S&P 500. The NQ is the NASDAQ market. So I like to see where the market is going, where we're bouncing off of, where we came from, technical levels. And this is like what I call our compass. If we're going long, I like to be with the market. If we're going short, obviously, I'm going to be, taking puts if we're into a resistance area. That's just the smart way to trade. I don't like to go long coming into a resistance until we break through. Now, when you break through resistance, there could be a retest of that level, and then you can go long from there because I do like to trade with the overall trend. The overall trend, okay, since March 2020 has been very bullish, okay, obviously. So we're going to want to be more on the side of bullish, right? Until something changes, why wouldn't we? And, I'm going to go over all that in the charts so that you guys can see. Now, it's a daily chart, so you can have a bigger view, expand your views and see the whole landscape. That can really help you, with your stock trading, whatever trading you do. And then you could just dial it in to the smaller time frames and go from there. So we're going to do that, and then we're going to do some fundamental economic data, economic news that's also coming out this week. This whole week, in my mind, is based on what the FOMC says. So on Wednesday, we're going to see what they say. I think that is at 2 o'clock. I just want to double check. Okay, so at 2 o'clock on Wednesday is the announcement. What they are doing is they're going over data. They have these meetings, and that's where they come up with their economic policy and what they're going to do. Now, the two main things is going to be, will they speed up the taper, which would have the tapering of asset buying done by March, and could they raise the interest rates sooner than expected if they do the tapering quicker? And will there be more interest rate raises throughout 2022, which I think there was only supposed to be one. Now that may, also be sped up. And if inflation really is a major problem, the only way to get that down is to raise interest rates. So, we'll see what they say. We'll see how the market responds. And I think that's really key because it's going to be tough this week and very volatile, I feel, because we just don't know what they're going to say. And these days, on Wednesday could be, pretty tricky if you're trading the indexes, even stocks in general. So we're going to really want to watch and hear what they have to say. Powell has his press conference at 2:30 right here. Probably going to have questions and answer, certain things. So, that's going to be a main focus for the week. So be aware of that. It's not just technicals. We do have to look at fundamental and more macro economic events as well. So here's our Discord. A lot of great information in here. If you're interested, the link is in the description. Come join the Green Bar Trading community. It is a great community that is growing every single day, and a lot of really good advice in there from, day traders, swing traders, investors. Everybody has a different trading style. So you can check that out if you would like. It's up to you. Earnings for the week. This is what we have here. not a huge amount of earnings, but if you do want, uh, to take a look at some of these, you're more than welcome. I probably won't be trading any of these earnings, and you know, it is what it is. Not a lot. And then let's see what else we have here. Bitcoin. This is the past month, down just about 25%. Now, these big pullbacks in Bitcoin have normally been bought up around 25% down, 20% down. So I'm going to be really interested to see if this can kind of base out, break over 50 and hold over 50, and could possibly give us that run back up to all-time highs. It's happened in the past. I'm not going to say it's going to happen again, but I'm going to definitely keep that on watch. So now, let's get into the charts, and we're going to start with the S&P 500. This is the daily chart, like I said. This gives me a better view. Now, in our video last weekend, this is what we went over. We noticed the last time we based out, we bounced back and broke to all-time highs. So when we were coming into that video last weekend, this is what we were talking about. And it was setting up a very nice base. It was also setting up with a very nice hold of that 50 moving average. The 50 moving average, like we went over, has been absolutely key all year long. And once again, it was very key. Okay, now, this is the only thing that I do not like. When we have massive trouble getting through a level like this, you want to see that it breaks, and you want to see it break pretty quickly when we come back up and retest it. I do not want to start to roll over here. So this week coming up, it would be very nice if the S&P 500, broke out of this level. The only thing is I'm not loving the market breadth. That means, it's not all encompassing. Like, it's just a few stocks that are making most of the moves. I would like to see the market breadth, take in more of the stocks. And that's what we need to break through this level. It can't just be all Apple, Microsoft, and Tesla, and Google, making the market go up. I think I read something where 5 stocks accounted for over 20% of the S&P 500 move this year. That is pretty crazy. It's kind of what we saw last year as well. Those big FANG stocks making up a big portion of the gains. But now, and it's tough to really tell what the coronavirus is going to do to earnings. We're not going in anymore with the government giving everybody a ton of money to start, the year and to start the winter. We're going to have to deal with coronavirus. And, cases are ticking up a lot. And then you have Omicron. I think that was way overblown, but you still do have these risks to the economy. And you will have people that don't go out as much as they were. So the next couple of months can be a little tricky, especially being the winter in a lot of states. New York is where I live, and the governor just imposed a mask mandate everywhere indoors. They're doing a vaccine mandate for public, private, every employee. So, California has that, and California has not been doing as well as the restaurants in New York. And now, things are about to change a little bit. And, I don't love it because it definitely does not help business. So we're going to continue to monitor coronavirus, even though I think the market has really shrugged it off for the most part. If it starts to affect those reopenings, that's what's going to affect the whole market breadth that I'm talking about. And you're not going to get every stock, to start acting as one. We'll keep that in mind. So that's the S&P 500. Now looking at the tech, which is the /NQ, very clear channel all year long. Very clear from the top to the bottom, to the top to the bottom, and then got rejected here at the top. Was it a given? Possibly. I mean, we were super extended at the time. The market always retraces a little bit. When something looks so bullish, keep that RSI on your, daily chart. Keep a watch out on some of these moves, because then you start to see the pullback. Now, this did pull back and bounced at the 50-day moving average, which is very good. That's very bullish, very nice to see. The only problem is very clear area here, just like the S&P 500, that it can't seem to break and hold. So we had a break here, and then there's a huge rejection. So, and the volume profile, on this recovery has not been so great. Would like to see more volume on these days, so we have some follow-through days that would really confirm to me the market reversal, and this rally that I would love to see break out here. But you have an area here, and then you have the top of the channel right here. So you definitely have some overhead resistance as far as technicals go, and that's on the /NQ. So just keep that in mind as well. Just checking my notes here. So now that we went over the S&P 500 and the NASDAQ, and we can see, where we're coming from, what we're going into, it's going to be tough to make some picks as far as going long on them. But I am going to show you 3 stocks that I think have the potential to be decent trades, and we'll go over that right now. The first one is going to be one of my favorites, which you guys have seen me call out here on this channel a bunch of times. This is a stock that I was calling out, back here at $14 a share. It has held up very nicely all year long. Had earnings, just killed it. Absolutely killed it. Very, very solid company. And we are going into this area here at $47.50 for possible rejection. If we break $47.50, I have to think we're going to head back to this top end of the channel here. Is it going to be and provide a huge amount of return? I mean, that's actually more than I thought it would have been. So to get back to the top here would be about a 12% gain, which is great. I mean, that's not bad at all. And this is a solid company too, with a low PE. These are the type of stocks in a market, if they raise interest rates, you're going to want to be in more of those value stocks instead of those stocks that are trading at multiples that have never been seen before. You want something that actually is a good value. It's just safer. It might not be as sexy, but it's just safer. And this right here, this candle, is a bullish hammer. I love the bullish hammer, so I am all about this. It's a bounce off of the trend line. I really like it. No surprise to anybody that has watched the channel. This is another one. This hasn't done, what I thought it would do. It's still in a moderate, very minimal uptrend here, but it has a double top here with a pretty bad rejection. At least this held around a while. This hit the double top and totally rejected. I still think with the infrastructure and the use that's going to be needed for a company like this, it could be a decent low risk entry for a run back to all-time highs down here. It's happened before. It usually happens off of earnings though, and that's the only problem that I see with this chart. Unless some kind of infrastructure, some kind of talk gets done with this, it is almost at support though. So you could look at it like, okay, if I go long here, I could always cut the trade if it breaks down, under this trend line, or give it a little room to 19 or so. It's, a better deal though. This is a better deal than buying up here at 26. You're now getting the same stock for just about $20 a share. So that's decent. I don't love it because of how much it's sold off, but it is what it is. Now, another one I'm going to pick here is Facebook. And this one might come as a surprise. So I actually think by looking at this chart, it broke the trend line, which you see here, went all the way down to 300, which is a key level, and bounced immediately. Now, it also bounced with the market. Like we say all the time, you want to be trading with the market. You want your trades to have the market at your back. So it gave you that nice bounce. I still do see some lower highs. I see some lower lows. And I do think this could be an opportunity to take a couple of put contracts, whatever you want to trade, for the retest of this area of 300. It's possible that it happens. That would be my take profit here, just to go back to previous levels. As long as it continues this downward trend here, this resistance area, it just can't seem to get through. It's tried a couple of times here, but has rejected pretty hard since. So, we'll see. I'm going to keep it on watch. This is actually, a possible short. Couldn't really hold over 350. So that is going to be one of my shorts. And let's see what else we got here. I think that's about it, but I did want to show you guys CVS. This stock has been really, really nice. A very nice breakout here of this resistance. This is what I'm talking about with a resistance trend line. And then the break of it is always pretty decent. So this is something like on Facebook. If you come up to the resistance area and you don't reject it, but you break out of it, that could give you a pretty nice trade. Now, the reason why I like CVS is they are doing their vaccines. So I just got my booster shot on Thursday, and you have to wait in the store for 15 minutes. Now, you're not chained to anything, obviously, but people do wait it out. And while they're waiting 15 minutes, they spend a lot of money. So I think CVS going into 2022 and having, these shots administered at their store, and I don't think it's going anywhere. You might have an Omicron shot. I think their earnings are going to be really, really good. So CVS is definitely going to be on my watch list. I would love to pick it up, and I'll set an alert right here. If it ends up pulling back, doesn't mean it has to, but if this pulls back to 95, I would definitely try this long with support on that breakout area. So, not much in the way of, picks for the week. I'm not in love with any of them. It's just, the overall market right now, I'm having a tough time until we break out of that area and have a nice follow through day with more volume than the day before. That's when I'll feel more comfortable to just get into all these long. I don't like to buy going up to resistance. resistance that couldn't be broken for 5 weeks. I want to wait and see that break first before I'm somebody or a retail trader buying shares from the big institutions that are more than willing to sell at all-time highs to retail investors. So I would like to wait for the break, and then if it does, then we can get long. So that's it for me, guys. I hope the video wasn't too long, but still hit that thumbs up for me, and I will see you back on the next one. Take care.